Good morning and welcome. This is Business Morning on Channels Television. Thank you for joining us. I'm Chimize Obi. Well, we'll start off from the global oil market where prices slipped in early trade as a rebound in COVID-19 cases in Europe raised concerns over demand amid expectations that supply will rise, while some in the market still fear the United States may release crude reserves to stop a rally in gasoline prices. Brent crude fell 9 cents to $81.96 a barrel, while U.S. West Texas intermediate crude slipped 10 cents to $80.78 a barrel. Europe has again become the epicenter of the COVID-19 pandemic, prompting some governments to consider reimposing lockdowns, while China is battling the spread of its biggest outbreak caused by the Delta variant. The Organization of the Petroleum Exporting Countries last week cut its world oil demand forecast for the fourth quarter by 330,000 barrels per day from last month's forecast as high energy prices hampered economic recovery from the COVID-19 pandemic. Fears of declining demand come as supplies are expected to rise. There is additional pressure on oil prices stemming from a stronger dollar, which makes the commodity expensive for buyers holding other currencies. And Africa must be a marketplace where no country is left behind. That's according to the President Muhammadu Buhari, who spoke at the opening ceremony of the Intra-Africa Trade Fair in Durban, South Africa. President Buhari, while urging other African leaders to support local entrepreneurs, highlighted that Nigeria has made significant strides in the diversification of its economy in the last 5 years by putting in place policies that support investment in key sectors. Also addressing the conference, Chairman of the Advisory Council of the Intra-African Trade, former Nigerian President Chief Olusegun Obasanjo, highlighted the importance of the event to the success of the Africa Continental Free Trade Area. You take a listen.
Several African leaders, including President Muhammadu Buhari and business leaders from across the continent, gather at the Durban International Conference Center for the second edition of the Intra-African Trade Fair. Hosted by the African Export-Import Bank and the South African government, the trade fair is expected to attract about 10,000 buyers and sellers and generate $40 billion in trade deals. In his opening remarks, former Nigerian president and chairperson of the IATF 2021 Advisory Council, Chief Olusegun Obasanjo, highlights the importance of the event to the success of the Africa Continental Free Trade Area.
The Intra-African Trade Fair is an important component in righting the wrongs of the past and breaking down borders. It is aimed at building bridges to help us achieve the ambitions of Agenda 2063, the Africa we want.
For President Buhari, the country has made significant strides in the diversification of its economy by putting in place policies that support investment in key sectors.
Nigeria has come to Durban in full force to actively participate in this very important trade fair. In the first 5 years, Nigeria has made significant strides towards the diversification of our economy from an oil revenue dependent country to a nation with diverse revenue sources. We were able to achieve this by putting in place fiscal, monetary, and trade policies that support investments and investors in key sectors.
Meanwhile, a visit to the Nigerian pavilion, spearheaded by the Nigerian Export Promotion Council, showcases several traders from across the country.
Exposure is key for business for them to transform. If you don't interact and you don't even see what is happening in the world, how do you export? And export is important for us. I say it, Nigerian economy must be export-led.
To top the opening day off, a visit by President Buhari to examine the pavilion. Well, that visit from President Buhari to Nigeria's pavilion wraps up day one of the Intra-African Trade Fair. For the next 6 days, over 1,000 exhibitors from across Africa, about 100 from Nigeria, will be showcasing their goods and services with one clear message: Africa is ready for business. From Durban, South Africa, Teniola Shobowale for Channels Television News.
Back here in recent times, the continuous rise in the price of LPG, otherwise known as cooking gas, has remained a major concern for many. The price of cooking gas has more than doubled in the last 1 year. This commodity is symbolic because it represents a product that many Nigerians, especially those living in urban and semi-urban areas, need for everyday cooking. Ironically, Nigeria has this commodity in abundance, 9th largest reserve. That's about 207 trillion standard cubic feet as at 2019, and it is a source of clean energy that Nigeria is advocating for many of its citizens to change to. What are the key issues and where are we getting it all wrong? Deputy President, Nigeria LPG Association, and the MD Asiko Energy, Felix Kundayo, joins us now. Thank you very much, Mr. Kundayo, for joining us on the program.
Thank you very much for having me here.
You know, when we talk about LPG, it's really crazy. One question that will come to mind: why do I have to pay such an amount of money to just buy 12.5 kg cylinder of LPG? Why?
Okay, it's become a topical issue of late. And the factors related to the price rise are not unconnected with reasons why, for example, the federal government and the president are outside the country. We live in a global economy, right? Since the end of COVID, there has been a sharp rise in the price of gas internationally, which affects us here. That pulls the price up.
But that's, when we talk about the global, that's natural gas. Natural gas and liquefied petroleum gas, are they same?
How should we say? They are related. One you might call a parent and the other an offspring. So LPG comes out of natural gas. Therefore, if the price of natural gas goes up, if the price of oil goes up, it would naturally pull the price of LPG up. So the three key factors that have driven up the price of LPG are, one, as I said, in terms of the global price rise. Following COVID, there's been a surge in demand. That has pushed the price of energy up. There's also been the unfortunate situation where we had the devaluation of the naira. The gas is priced in dollars, we are paying in naira, so the devaluation also had an impact on that. The third aspect, however, and that's the unfortunate part that we're now seeing, is adverse government policy. The effect of the first two effects were greatly impacted the price of LPG in the first 2 quarters, quarter one.
Which is, when you talk about government policy, which is?
The specific area of government policy that has affected us now is the imposition of VAT on imports. And not just the imposition of VAT on imports, a retroactive claim on VAT for the last 2 years. That's actually the biggest component of this spike. So what happened in effect was we had an anomaly for about 15 years. The Obasanjo administration had given a waiver, but in the waiver, they erroneously included the word import. So the waiver was on imports. When the domestic LPG program started under NLNG, of course it was domestic, couldn't be classified as imports. FIRS interpreted that to be that they could tax that. But you had this anomaly where imports were not taxed and local gas was taxed. So the Nigeria LPG Gas Association fought for roughly about 12 years to get that reversed. Every time we made progress, there will be some change in administration.
I mean, taxing the local gas.
Correct, correct. That made local gas a little bit more expensive than imports. We was finally able to reverse that situation in 2019 when we got the government to agree that, yes, this should not be taxed, and a gazette was put out. Unfortunately, when they now did the gazette, they ill-advisedly now stuck in the phrase domestically produced, as opposed to just writing LPG. That created the reverse problem. So now domestically produced was not VAT, but it left the way open for imports to now be VAT. They'd been covered under the Obasanjo waiver, but that was rescinded by a memo from the presidency, which is why I said ill-advisedly so.
Now, the question again is, why should we be importing gas when, I mean, Nigeria houses one of the largest gas reserves?
I think sometimes we concern ourselves with populist, how should we say, mantras. We import quite a lot of stuff. Okay, we import gasoline. The biggest problem we have is not the import of gas. The biggest problem we have is the import of gasoline. That's what is actually affecting the economy the most. You will end up in a situation where you have a balance of trade. Even the US exports gas, imports gas. It really depends on where you are.
So how much do we import and how much do we produce locally?
Our proportion of imports have actually declined. So a number of local producers have been operating for about 12 years, be it PNG gas, be it Zenergy and so on. We then had another couple that were commissioned and started operation last year. They have contributed to local production. We have probably another 4 or 5 that are coming up in the near future, Southfield Petroleum, Anor Gas, and so on. So there's actually quite a lot in the pipeline for domestically produced LPG, okay? What you don't want is a shock to the system, and that shock is what has just been introduced. We will always have a situation where we'll have an element of imports and an element of domestically produced, but the share of imports is declining. What has happened is that it's been forced to decline a little bit too fast compared to the rate at which inland producers are coming up.
Now, there's this argument that another issue that this sector is facing is the type of cylinder that we use and, of course, the type of LPG that we produce, as in matching with the type of cylinder that we use. And, of course, I think we still import cylinders, isn't it?
Yes, we import cylinders, but again, it takes time to get a manufacturing base up. In that time, there have been 2 major, at least actually 3. You have Ron Gas, who've setting up their fiber glass cylinders. You've got Technogas has set up a factory down in the Lekki axis, and you have a Chinese company that's been manufacturing for a number of years. They changed names, so I don't have their current name. But these are people producing cylinders locally. They have their challenges as well in terms of to do with policy and how you bring steel and material in to produce the cylinders. I'm not entirely sure what the context of matching cylinders to gas is.
Kind of gas. Okay, now for your association, what role do you play really in advocacy and, of course, in controlling perhaps the prices?
We do not intervene on prices. We do not have the mechanism to. LPG has always been a deregulated product, so we don't have the mechanism to. What we do is advocacy. What we also do is in terms of bringing in the right skills and standards for people who want to work in the industry. It's only through the application of the best practices that you can bring down or you can make the industry more efficient. Prior to this shock that we've seen to the system, in fact, in real terms, gas pricing had been declining over time. This is the first time since the domestic LPG program, the DOM LPG program of NLNG, that we have seen gas prices hit this high. The last time it came this high was just before the DOM LPG program started, which was in 2007. So in my own, how should we say, 30 years or so of being in the gas business, this is a unique period. And I think it is one that requires urgent attention and coordinated attention.
So talking about urgent attention and coordinated attention, what is that urgency there? What do you think should be done right now to really salvage the situation? And when are we likely to see the law of gravity taking a course in this matter?
Okay, we are already beginning to see a significant impact on imports and importers because they feel persecuted. And you could argue that they are being persecuted. And yes, there's a revenue drive, but you're not going to gain a lot of revenue from a product that you are effectively promoting. We're supposed to be in the decade of gas, right? Therefore, it's incumbent on the government to make sure that in this decade of gas, it is easy to use gas, not difficult. Gas already has a lot of challenges. We're supposed to be going into auto gas. Auto gas can't really grow without the subsidy on petroleum products being removed. We're supposed to be going into industrial consumption of gas, but if the gas price is high, you're not going to get a lot of manufacturing industries using it. Then the domestic sector, which is the mainstay of the LPG industry, has this shock to the system in terms of the rise in the price of the cylinder, which homes and consumers can't afford. The real biggest issue is not the VAT going forward. The biggest issue is the way customs has gone about claiming 2 years of retroactive taxes. How do you claim taxes on the gas that was already sold over 2 years and then dump it on our stakeholders, right? How are they going to move forward? Some have actively decided they're shutting up shop for this year. They are not bringing in cargoes. I recently saw a memo yesterday to another producer, to another terminal from customs, effectively threatening them if they don't start paying within 7 days, they were going to shut them down. How do you claim 2 years of back taxes, right? By the way, this is after a meeting that was held in Abuja with the supervising ministry of the Customs and Excise, and where they said, yes, they accept that something has to be done, and the memo from the presidency needed to be addressed. But in the meantime, Customs has gone out on a revenue dash. Imports in September crashed by 50% to what they were in August. That's a significant drop. It's a supply-driven product, okay? Therefore, if you cut supplies, prices will spike. That's what we are seeing now.
So we are likely going to have a difficult Christmas? Is that what we are expected to have? I mean, we will probably not find gas to cook our food.
It's a self-inflicted injury, and it's one that can still be mended. Okay, so we have time. So I won't give a prognosis that we are going to have a very bad Christmas. However, if we don't resolve this
How
issue,
much talk have you been, I mean, your association, how have you been discussing with the government to ensure that this ends before this year rounds up?
there have been a number of approaches, soft approaches, formal approaches via letter, physical approaches through meetings where stakeholders were requested to attend a meeting with the Ministry of Finance. All of those issues have been tabled. All of those issues are known. What I said earlier, I said coordinated action. We are not getting coordinated action from the government. One part of the government is saying, yes, we understand what the problem is. Another part is saying, well, I have been given a mandate to raise money. Therefore, I am going to raise money unless I get to hear from Oga at the top, whoever that may be. That's the issue we have. So we've got two arms of government not agreeing with each other, and the executing arm of that of government at the moment is an issue.
Coordinated action, a major takeaway. Well, let's just hope we eventually get it right and get all of these resolved, because we must cook plenty of food this Christmas. Thank you very much, Mr. Kudayo, for coming on the show. We do appreciate your time.
Thank you for having me on board.
It's a pleasure. Well, Mr. Felix Ikundayo is the Deputy President, Nigeria LPG Association, and of course the MD at Siko Energy. Commodities market update is next after the break. Do stay with us. The National Bureau of Statistics on Monday released the inflation number for the month of October 2021. In comparison to October 2020, the headline inflation rose to 15.99% in October this year. That's a 1.76% increase from the 14.23% recorded in October 2020. However, on month-on-month basis, the headline index declined to 0.98% in October 2021. This is 0.17% rate lower than 1.15% recorded in September. The composite food index rose by 18.34% in October 2021 compared to 17.38% in October 2020. On month-on-month basis, the food sub-index declined to 0.91% in October 2021, down by 0.35% points from 1.26% recorded in September. For more, of course, on this latest inflation numbers and other burning economic issues on the commodities market space, have here with me Dumebi Iyeke, one of the research analysts with Financial Derivatives Company. Join us now. Good morning, Dumebi. Good to see you.
Good morning.
Good morning. You look great.
Thank you. You too.
Well, looking at that inflation number yesterday, how are you guys at FDC interpreting those data yesterday?
First off, we forecasted a decline in inflation to 16.31. So we expected the decline, but not as sharp as 15.99% compared to September 2021, which was the data for September 2021 was 16.63%. There are two angles that we're looking at this, and the first one is that, number one, anecdotally, Nigeria's inflation rate or inflation rate for various countries usually moves in tandem with the global inflation trend. And currently we're seeing that global inflation rate is trending upwards. So that's raising questions as to why the domestic inflation is declining. For example, we're seeing that inflation is at a record high in the US, about 6.2%. UK inflation is above 3%. Eurozone as well, their inflation is trending high. China's inflation is also high.
And even here, the fundamentals are not even... Okay,
exactly,
we just finished talking about the cooking gas, which has gone up. We have vegetable, we have flour.
Exactly. And even on a global scale, we're seeing that the FAO came up with some data points saying that the global food prices have surged to a decade high. So there's clearly the upward surge in commodity prices. And, you know, it's raising questions as to why domestic inflation is declining. That's one angle. Then the second angle is market reality. So we can see that commodity prices are actually high. And if we look at the data, we saw that headline inflation declined following the decline in food inflation, which constitutes about over 50% of the inflation basket. So directionally, if food inflation is declining, we will see the same impact in headline inflation. So seeing that food inflation is falling, meanwhile, commodity prices are, you know, on the high side. So that's also raising questions as to, number one, the integrity of the data being published. Number two, exactly how this is having so much impact on people. You know, there's already a trust deficit in the system. People really, you know, flaw a lot of things in the economic system. But now we're looking at this on an impact level. How is it possible that how is it possible that inflation is falling and my money in my pocket is not still buying as much in the market? If anything, I still saw on the news today that the producers of sachet water are saying that a sachet of water would likely increase from 20 naira to 50 naira. That is one of the cheapest commodities in Nigeria. And if data has been published that this is going to increase to 50 naira, how much more other commodities like cooking gas that on a year-to-year basis have, you know, surged by over 130%? We're looking at the same impact for commodities like gari, rice, bread, you know, beans, pepper, you know. So even though there's some seasonal effects on some of these commodities, but we can't overrule the fact that there are underlying factors pushing commodity prices high, and clearly these factors are not, you know, reflected in the data being published.
Yeah, talking about the integrity of this data, you know, I was a bit confused when I saw, you know, this data. Now, you talked about September, which was, I mean, September, that was year on year, actually, and that was about 16.63. Okay, year on year, September 2020 to September 2021. And this time around, they are looking at October, I mean, talking about the headline inflation year on year, October 2020 and then October
2021.
And when we look at it, we'll see that headline inflation actually went up. But what we're seeing trending down is the month on month.
Yes.
You know, like when we look at the headline inflation month on month declining to 0.98% in October. And in fact, all the sub indices month on month are all in the decline. And just as you said, that brings to question the integrity of this report and of course what is the reality in the market if we have to see month on month inflation coming down.
So like on a year-to-year basis, if we want to even look at the impact on our disposable income, if you're earning about 200,000 naira and you were earning that last year, you're still earning that this year, no increase in your income, and inflation as of October 2020 was 14.43%. If we discount what you are earning, means that as at October 2020, your 200,000 in real terms was just about 171,000 naira, meaning you could purchase goods worth about 171,000 naira. Now you come to October 2021, that has gone down again to about 168,000 naira. So clearly the impact on disposable income is really significant. If you're earning 200,000 naira and the real value of your money is just 168, and the price of cooking gas that you, because someone earning 200,000 naira clearly can afford cooking gas. The person earning 200,000 naira is paying rent on an annual basis of probably, let's say, about 500, because by the time the person calculates, then, and meanwhile, your rent is projected to still increase. The landlord is telling you your rent is going to go up to about 600 or even 700, you know, before long. The price of water, let's say you were buying table water before, now the price of sachet water is probably going to increase. You know, you're obviously going to spend more. You know, food items are already costly. So clearly, the impact is a lot more, you know, on the masses. And remember that the more inflation goes up, it really says a lot about people that are going to keep living below the poverty line, because clearly not enough people have as much to sustain themselves in the economy. So it tells a lot on the quality of life. And just last year, the World Bank said about 7 million people were pushed back, you know, pushed down below the poverty, pushed down the poverty line as of 2020 because of COVID. And, you know, so, but right now we're looking at not only COVID, we're also looking at other factors, insecurity, exchange rate pass-through, things that are, you know, dampening the quality of life of people. And clearly we're going to see more people, you know, pushed below the poverty line because of this, you know, dynamics that are playing out. And remember that the factors that are even affecting inflation, we're looking at insecurity, we're looking at the exchange rate pass. If we even look at the data, we'll see that imported inflation was actually still high. Imported inflation was actually still reflecting the impact of higher global commodity prices on, you know, domestic commodities. So the dynamics in the market show that inflation has gotten to an inflection point, and we could still see inflation rise, you know, very soon.
Now, looking at this data that is being churned out, what does that mean for your inflation forecast?
You know, it does create some sort of bubble, because when you're trying to forecast for inflation, you have to dwell on, you know, historical data. And if historical data, you know, there are big question marks on the historical data, it, you know, could somewhat make your forecast a little bit inadequate. But I mean, the only thing that one could do is still try to, as an analyst or as economists, and not only, you know, us at FDC, so many other, we just have to still keep trying to make sense of the numbers being published, and still try to, you know, follow through with current market reality and say, okay, this is what is currently happening. This is our own inflation basket. And for example, us at FDC, we use Lagos State as a proxy, you know, for the entire nation, for the entire nation. So our basket is not exactly the widest, I'd say, but I mean, Lagos State, you know, accounts for about 30% of the entire, you know, economic activities within the country. So it should still give us somewhat of an inkling as to how commodity prices are still going to go in the coming term and stuff. So it does raise some questions, but I mean, we'll still have to find ways around it.
Yeah. Okay, we're seeing local manufacturers losing about 50% of their profit to operating and forest costs. How do you think this will play out as the festive season approaches?
Typically during the festive season, we usually see commodity prices, increase, and that's because there's an increase in demand. People are traveling back, people are trying to stock up for the festive season and also. But I mean, prices have been high, so we could see them, go higher. And right now, for local manufacturers, the factor really affecting them is the limitation on forex supply, because a lot of these manufacturers still import their raw material inputs. So if the price of these raw materials are high, the exchange rate is a bit volatile, it will continue to affect their profit and obviously increase their operating expenses. So for local manufacturers, the tough business environment is still going to have an impact on their proceeds, on their revenue, on their output in the near term.
And how do you see this impacting your inflation outlook?
Definitely. For now, I mean, let me give that on two aspects. So let's look at the data reality aspect now. So we're likely to still see the downward trend in inflation. That's the data reality now. We're likely to still see that happen, and the expectation or what that would be hinged around would be increased economic activities, because during the festive period we see a boost in output, we see a boost in production just to meet this festive demand. So that would be the reason why the decline in inflation will continue. As for market reality, prices are still going to remain high.
Okay, let's look at the global oil space. Prices are fluctuating. Yeah. What's your take?
So there's still the demand-supply concerns. So recently, OPEC, reduced its Q4 2021 global demand forecast by 330,000 barrels per day, and this is, on the fact that demand is, facing some level of heat regarding the surge in coronavirus cases, especially in China, and the fact that there are fears of lockdowns. Are going to be, some countries in Europe are going to renew or reimpose lockdown restrictions because of this same increase in coronavirus cases. And there's also the fact that there could be some level of increase in supply because of this, expected demand shortage.
Right. Okay, and recently the FG stated that fuel subsidy will be replaced with transport and other palliatives. Just wondering.
So, according to the Minister of Finance, this is supposed to be somewhat of a social safety net for when the fuel subsidy is eventually going to be lifted in July next year. So, when that happens, this would come in to help cushion the effect on the people who can't really afford the market price of PMS once the fuel subsidy is removed. Because when we look at it, the price of diesel is already deregulated. The market for diesel is deregulated. The market for kerosene is deregulated. So according to the Minister of Finance, the amount of people who use PMS are not exactly so much. So it means that they can actually afford the market price of PMS. So this palliative is going to be, I mean, it's a good thing if we look at the fact that it's going to somewhat cushion the impact of higher PMS price on the masses. But the most important thing is the implementation. Who are the people that are going to receive this money, and how are they going to receive it? And are they actually going to receive it? We've, seen over time that there has been unconditional cash transfers to people. During the COVID time, there was the palliative that was, distributed, but then there were still eyebrows raised because the people that were supposed to receive these palliatives said they didn't receive the palliative. So this is another palliative. So the expectation would be that the implementation of this palliative, the people that are supposed to receive it actually receive it, because that's the only way we will see the impact of this. If fuel subsidy is removed, they say they're going to bring a transport palliative. The people that are supposed to receive transport palliative, if they receive it, I mean, it's a good thing.
We'll see how that
plays out. Yeah, exactly.
All right, thank you very much, Ndumebi. All right, we take a moment now. We'll be back. right, let's look at what's up with the markets, and we have Aniti there. Hi, Aniti.
Yes, good morning, Jimmy. Well, for the start of the week, I must say it was mostly mixed sentiment across the three markets, the fixed income market, the equities market, as well as the smaller unlisted securities market. But of course, we are going to start with the fixed income market, of course. And that's because, you know, yesterday, the National Bureau of Statistics released the much-awaited October inflation report, which showed a kind of a mixed performance or mixed report as regards the inflation numbers. So yesterday, of course, the inflation number, like you rightly said when I watched you earlier, that's it. It went up year on year, but it was down month on month. Now, let's take you up to speed with what happened yesterday at the fixed income market. For the secondary bonds market, it was with a much bearish, it kicked off in a bearish tone, and that's because there was much demand for the April 2023 bond. And then, of course, it expanded at the mixed and long segments due to sell-off of the July 2030 as well as the April 2037 bonds, respectively. So total number of deals there was 8. And then, of course, the value, 4.40%. Of course, at the Treasury bills market, it had a bullish bias. It was quiet, but had a bullish bias. Then the average yield there rose by 1 basis point to 5.2%. Of course, across the benchmark curve, the average yield was flat at the short and mid segments, but contracted at the long end as investors demanded the 283 date-to-month bills. So number of deals there was 5, value 5.6 billion naira. Let's cross over to the open market operations. Of course, we will be expecting about more than 103 billion naira in OMO maturities this week. So we will be looking out for how the market will turn out at the end of at the auction this week. So of course we would have had our analysts to talk about the fixed income market, especially when you look at what the outcome of the debt auction by the Debt Management Office tomorrow, where they will be auctioning about 150 billion naira worth of debt instruments in 3 tranches. So let's move over to the equities market. We lost about 11.3 billion naira yesterday. But Chimi, I think time is not really on my side. I could have given you more details about the market, but we'll do that tomorrow.
Absolutely, and we continue to hope for the best.
Exactly.
We take another quick break, and when we come back, we do a crossover to London. All right, let's talk to Juliana on some development out there in the UK. Good morning, Juliana. The Bank of England Governor Andrew Bailey told MPs yesterday he was troubled by the UK's rising inflation rate. Should we then expect a pre-Christmas interest rates rise?
Good morning, Chimi. Well, it certainly seems as if the Monetary Policy Committee have their finger on the trigger to raise interest rates in this country for the first time since 2018. It's currently at a historic low of 0.1%. Yesterday, the Bank of England Governor Andrew Bailey, alongside a couple of members from the MPC, were given evidence at the House of Commons Treasury Select Committee. And it does appear as if one of the only hurdles to prevent an interest rates rise has been cleared, and that's the labour market. We had unemployment data from the Office for National Statistics earlier this morning showing that unemployment in this country has dropped, surprisingly, yet again, from 4.5% to, I believe, 4.3%. Now, obviously, the Bank of England would have had some pre-data about what was coming today, and they did say that, the labour market did remain one of the stumbling blocks because it wasn't sure how the market would be affected after the end of the furlough scheme, which came to an end at the end of September. So the government were no longer paying for people to stay at home. Mass unemployment was expected, which would mean there would be a drop in demand for goods because people wouldn't have enough money in their back pocket to go out and spend. But alas, that's not the case. Unemployment is dropping. There's again a record number number of vacancies out there. So if you're living in the UK, now is a pretty good time to get a job. Over 1.25 million jobs that are going unfilled in the UK, which means demand is still there. Will we get an interest rate rise in December? Potentially, although, of course, we were taken by surprise when the MPC decided not to raise them earlier this month. But all's to see. But Andrew Bailey is certainly worried. We'll get inflation for the month of October, I believe, tomorrow.
All right. I will keep a tab on those data. And, of course, you'll update more on the unemployment rate with Ladi later this afternoon. Anyway, in another development, Shell's plan to move its headquarters to London gets Dutch backlash. This is seen as a post-Brexit vote of confidence. But are investors happy about this move?
Well, investors seem to be happy because yesterday, when it was announced, the Class A shares, which is the London-listed shares, they were up by about 2.1%. The Class B shares in Amsterdam were up, I believe, by about 1.9%. But as you're right, you know, this has caused a major backlash in the Netherlands. This comes amid political turmoil the country is currently going through. Mark Rutte, who's been the leader since, well, for 11 years, he's expected to extend that tenure, but there are still some political wranglings. And as you said, this is definitely seen as a post-Brexit coup by Westminster. They were shamefully knocked off, or London was knocked off the top of being Europe's biggest trading market by Amsterdam in January because of all of the issues and the bureaucracy around trading in post-Brexit eras. But, you know, nevertheless, the fact that 125 billion pound Europe's biggest oil firm now wants to shift over to London is great for London, but obviously not great for the Netherlands. I believe MPs are thinking of doing whatever they can to stop this from happening. It's not set in stone. I believe it is going to go to a shareholder vote within the next 4 weeks. One of the sticking points is this 15% dividend tax, which the Netherlands did put on to Shell, and perhaps the removal of this would make the oil titan consider. It's all to play for, but I think one of the biggest sticking points is them removing Royal Dutch from the name after 125 years. That dealt a hefty blow.
Yeah, no. All right. Thank you, Juliana. We expect more updates from you later in the day.
Thank you.
Okay, let's cross over to the crypto market with the man, Ladi. Ladi, Bitcoin and other cryptocurrencies, including Ethereum, fell sharply early today, retreating from near record highs. What's driving that sentiment?
Well, as I always say, this is a highly volatile market. So these swings are actually expected. We've seen Bitcoin get as high as $66,000 and now dropping to about 60K. A massive bloodbath has seen top cryptocurrencies actually drop about 10 to 15% this morning. So it's a huge bloodbath this morning with the market cap there down 7.79%. But first, regulation is a big issue right now in cryptocurrency. So let's take a look at what's in the news right now in the world of crypto. We see there that the world's leading blockchain ecosystem, Binance, today announced 10 fundamental rights for crypto users that can serve as a guiding hand in regulatory discussions and development of global frameworks for the crypto markets. The customer rights, published today globally, are meant to ensure safe access to emerging technologies, liquidity, and secure platform, among other steps, to protect users without limiting growth and innovation. Some of these fundamental rights here. Number one, every human being should have access to financial tools like crypto that allow for greater economic independence. And industry participants have a responsibility to work with regulators and policymakers to shape new standards for crypto assets. Smart regulation encourages innovation and helps keep users safe. Also there we have Zanzibar actually exploring adopting and regulating crypto. They've announced that they're currently looking into a possibility of regulating and adopting crypto assets across the state, which Zanzibar, being a semi-autonomous state in Tanzania, is on the verge of holding meetings with several parties across state. Well, let's bring in Rume Ofi now. Great to have you, Rume. Good morning.
Good morning, Ladi.
Yeah, so looking at this fundamental 10 fundamental rights for crypto users actually announced today by Binance. What are the key takeaways for you?
I think regulation is the way to go, and this regulation varies from countries to countries. For example, in the U.S., SEC says cryptocurrencies are securities. Their Commodity and Futures Trading Commission says cryptocurrencies are commodities. The Treasury is saying it's currency. About all of these put together, we know that the regulation in the U.S. actually falls under the scope of the Bank Secrecy Act, BSA, and you have to register with the Financial Crime Enforcement Network for you to be able to get involved as an exchange platform. And I think it's not just in the U.S. Also Canada has its own. You have to meet the regulatory requirements of the Canadian Securities Administrator, CSA. The UK has actually come to say, digital cryptocurrencies are digital properties. That is, you can get involved in them legitimately, going through the Financial Conduct Authority, FCA. Japan is there. You can see Australia is there. Singapore is there. South Korea is there. So all of these are the ways to go. And even our country here, Nigeria, the Nigerian SEC earlier last year came up to say virtual assets are treated as commodities, right? So, and they are still putting some other things together as framework, trying to say, we're going to create a division to study cryptocurrency so that we have a more robust way to do a lot of things to make the environment healthy for those transacting in cryptocurrency. But I also think that the National Assembly has a role to play in all of this. So we have a safer place where people can trade and get themselves involved, trading responsibly, but also the exchange platform needs to do, like you said, the 10 fundamental rights for crypto users have been there, have been enlisted, and you've actually talked about a few. And responsible crypto platform has the obligation to protect users from bad actors and implement Know Your Customer. There is KYC, which I know platforms like Binance and is doing a whole lot about. So I think regulation is the way to go. We need to get a clear picture of where we are going so that we don't stifle technologies to lose out on the opportunities. I also must thank a lot of people involved in all of this to make sure that Nigeria is actually at the forefront of doing things right in terms of cryptocurrency and blockchain technology.
All right. All right, Rome, we'll keep having these conversations. Thank you so much.
Thank you very much, Ladi.
All right, top words of market cap there. I told you, Jimmy, BNB there down 7%. We see Cardano losing that $2 mark there, down 5%. Solana down about 7%. And XRP there closer to $1 now, down about 7.70%. So, Jimmy, it is a bloodbath right now.
I have a particular interest in ZRX. What's happening to that coin?
Well, looking at ZRX, obviously, when Bitcoin goes volatile, ZRX actually follows the trend. So it's fallen down from about $1.20 to about $1.10 right now. But this market, when you have those pullbacks, there's always, a recovery at some point.
I see. Well, we'll continue to track the market. Thank you, Ladi. All right. On that note, we draw the curtain on today's edition of the program. Thank you for watching, and don't forget to join us later this afternoon by 1:30 on Business Incorporated for more updates on developments in the world of business. I'm Chimizi Obi Iwagu.